Hey everyone, it's Julie here with TipRanks, and today we're taking a look at Michael Burry's top stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Michael Burry of The Big Short fame rose to popularity in the mid-2000s when he bet against the housing market. The neurologist-turned-hedge fund manager is a known contrarian investor and now manages Scion Asset Management. Today we're going to take a look at the top 3 positions in his hedge fund and what the rest of Wall Street has to say about them. We came across these companies taking a look at Michael's hedge fund manager portfolio over on TipRanks. You can find these hedge fund manager portfolios under top hedge fund managers or just by searching the name of the fund or manager. On the left here, we can see different details, including the fact that Michael is currently ranked number 39 out of nearly 500 hedge fund managers, and other details on the hedge fund down below. You can check out his hedge fund and others over on the TipRanks website or underneath the Experts tab on the TipRanks mobile app as well. Links will be in the description down below. Just before we get into his top stocks, this is a reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into Michael Burry's top stock holdings. The largest holding in Michael Burry's hedge fund is a Chinese stock, and this is a sector that he's devoted about 50% of his hedge fund to over the last couple of years. In that top position is Alibaba. They trade under the ticker BABA, currently priced at $95.84 per share. The stock has climbed over 22% in the last 1 year, and after the last 3 months is up 27%. They currently score a 10 out of 10 on the TipRanks Smart Score, with bullish blogger sentiment, increased hedge fund activity, and positive technicals. Alibaba is a Chinese tech company specializing in e-commerce and cloud computing. As one of the world's largest retailers and e-commerce companies, they compete with the likes of Amazon. Back in 2020, they were rated as the 5th largest AI company as well. Their digital retail business contributes to most of the company's revenue, providing a global wholesale marketplace connecting businesses with suppliers, manufacturers, and wholesalers. Their e-commerce segment includes Taobao and Tmall Group, while their cloud computing segment supplies elastic computing, storage, network infrastructure, security, big data, and artificial intelligence. In 2023, the company's revenue totaled over $130 billion. The Alibaba stock makes up over 20% of Michael Burry's hedge fund, and he's certainly not the only hedge fund that's been scooping up the stock. In the last quarterly filing, Scion Asset Management increased their holding by 24%, bringing it up to over $11 million. But in the last quarter, we also saw hedge funds across the board increase their holding by 3.7 million shares. When we look down below, there are some companies with huge positions in the stock, including PrimeCap Management at $1.5 billion. They'll be sharing their Q2 earnings report in a couple of weeks on November 14th. This does follow mixed results for their first quarter back in August, where their earnings per ADS did come in as a beat, but revenue did slightly miss. For their Q1, they reported earnings per share of $2.30, beating expectations by 20 cents per share. For this upcoming Q2, analysts are anticipating $2.07. Revenue came in at about $33.47 billion, which did grow a few percent year over year, but missed by $1.15 billion. Commenting on the quarter, management said that they continue to invest for growth in their core business while reducing losses in other business units through operating efficiency. Earlier this month, we did see a 5-star analyst from CMB International increase their price target on the stock. They noted that they were encouraged by the pace of monetization improvements with Alibaba's Taobao and Tmall platforms, as well as the positive adoption rates among merchants, which are expected to accelerate with increased merchant penetration and potential improvements in consumer sentiment. Additionally, the progress in Alibaba's international business, the recovery of its cloud segment, and the reduction of losses in non-core businesses contributed to a positive outlook on the company's future performance. The stock currently comes in as a strong buy based on 19 analyst ratings, with 16 buys and 3 holds. And the average price target of $123 implies an upside potential of over 28% from current prices. Looking at those ratings down below, we do have quite a few analysts bumping up their price targets recently. Our high-end price target comes in at $145 for an upside of 51%, while for our low-end price target, we have to scroll back to August for this one hold rating at $85 and a downside of over 11%. Our second Michael Burry stock is Shift4 Payments. They trade under the ticker FOUR, or FOUR, currently priced at $92.80. They've climbed a whopping 101% over the past 1 year, in the last 3 months climbing 35%. They also score a 10 out of 10 on the TipRanks Smart Score with increased hedge fund activity, positive crowd wisdom, and bullish blogger sentiment. Shift4 Payments is a provider of integrated payment processing and technology solutions. They offer software providers a single integration to an end-to-end payments offering, a powerful gateway, and a robust suite of technology solutions, including cloud enablement, business intelligence, analytics, and mobile, to enhance the value of their software seats and simplify payment acceptance. The Shift4 model is built to serve a range of merchants, from small to medium-sized businesses to large and complex enterprises across numerous verticals, including lodging, leisure, and food and beverage. This was a new addition to Michael Burry's hedge fund when they purchased about $7.3 million worth of the shares last quarter. And that put them as the second largest position in Scion Asset Management at nearly 14% of the portfolio. And we have seen other hedge funds increase their holdings in the Shift4 payment stock, not quite as much as Alibaba here, by about 140,000 shares last quarter. Looking at those holdings down below, Michael Burry is the second largest holder here. They'll share their Q3 earnings report on November 6th, following mixed results for their Q2 back in August. For their Q3, analysts are anticipating earnings per share of $1.07, which would be a notable increase over last year's. For their second quarter, they reported earnings per share of 96 cents, which beat expectations by 9 cents per share. Revenue came in at $827 million, which grew nearly 30% year over year, but fell almost 30 million short of analyst expectations. The company did see an increase of 38% on their gross profit and a 50% increase year over year on their end-to-end payment volume. Just last week, an analyst from Citi increased their price target on Shift4. They said conditions for continuation of positive sector performance remain in place for the fintech group headed into the Q3 reports. They believe a relatively benign macro environment thus far, steady to lower rates, more even fund flows, improving sentiment regarding larger cap multiple ceilings, and further profitability ramps can better support stock valuations. Shift4 currently has 18 analyst ratings and nearly comes in as a unanimous strong buy, with 17 buy ratings and just 1 hold. The average price target of $99 would imply an upside potential of about 6.7%, but when we look down below, we can see more recent ratings are looking more bullish. That includes our high-end price target of $120, which would be an upside of over 29%, and a lot of recent price target increases in the last couple of weeks here. When we go further back, we have some price targets with downside, bringing down that average, including our low end from back in August with a downside of over 24%. And our third Michael Burry stock is another one that was a new position to the hedge fund last quarter and is a stock that is actually jumping up today. That is Molina Healthcare. They trade under the ticker MOH, currently priced at $336 per share. The stock has climbed 22% today following their earnings report, which of course we'll get into in just a minute. Overall on the year, they are fairly flat at down 0.07%, and in the last 3 months up 3.7%. Molina Healthcare provides healthcare services to individuals and families who qualify for government-sponsored programs. Molina Healthcare contracts with state governments, offering managed healthcare services through their state insurance marketplaces and providing a wide range of quality healthcare services for those qualifying for Medicaid and Medicare. Their plans offer comprehensive quality benefits and programs, including access to a large selection of doctors, hospitals, and other healthcare providers at little or no out-of-pocket costs. As I mentioned, this was another new addition to Michael Burry's portfolio when they purchased about 7.3 million shares last quarter. And similar to Shift4 Payments, that puts them just shy of a 14% position within the portfolio. As you saw on the chart, the stock is jumping today, and that is because the company just released their Q3 earnings report. As you may expect, it went well. They saw both an earnings and revenue beat and reaffirmed their full-year guidance. For their Q3, they reported earnings per share of $6.01, beating expectations by 21 cents per share. Revenue came in at $10.34 billion, growing 20% year over year and beating expectations by $430 million. They also reaffirmed their full-year guidance with expected premium revenue of about $38 billion and adjusted earnings of at least $23.50 per share. And following that earnings report, we do already have a handful of Wall Street analysts weighing in, including a 5-star analyst from Mizuho Securities. They commented on the notable earnings beat and said that although the medical loss ratio slightly missed estimates, the shortfall was less severe than anticipated. They said that reiterating their full-year earnings guidance for the year showcased management's confidence in navigating the current challenging industry environment, and that despite a recent decline in the stock price, they anticipate a potential relief rally given the low investor expectations and the company's solid quarterly results. Analyst opinions are a bit more mixed here, though. The stock does come in as a moderate buy based on 12 current ratings, with 5 buys, 6 holds, and even 1 sell. The average price target comes in at $358, which would imply an upside of 6.5% from current prices. Looking at those ratings down below, you can see just today we've received both buys and sells. Our low-end price target is a hold rating back in July with a downside of over 11%, while our high-end price target, we have a couple at $378 for an upside of over 12%. So that is a quick look at the top 3 holdings in Michael Burry's Scion Asset Management. You can head on over to the website to see a full list of those holdings and let me know your thoughts in the comments of which stock catches your eye the most. I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what Wall Street is up to, so please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.